Those who are attending this session, they will get the access to this particular video, others will not get. So reason is we need to take very uh, proactive stage to make it aware that our system means this particular educative systems should be useful for the intended audience. Those who are not serious, let them not to learn. So we have no say on that. So this particular strategy, what we are going to learn today, it is known as your complex daily yield strategy. It involves 8 positions. So first, understand how many positions are involved. 8 positions it involved. 3 strategies it involves. Number one, there will be a box spread. Second, it will be a long straddle or a strangle, long straddle or long strangle. And third is a short straddle or a short strangle. So these three strategies are being combined together to form this daily yield complex setup. So you have different expiries. Now come to the point which are the expiries will be there. So the first box spread will be on the par month contract. Suppose we are sitting in the January, so it should be in March. So once that per month contract, March, June, anything is available, you can available also at a good price, you can take. Box spread is one layer of protection. So out of these three, only one, this third one is our regular profit contributor. Means this particular third leg, short straddle or short strangle, is our profit contributor. So this will contribute to our profit. This box spread and a long straddle or strangle, these two are the protector of this. If this has gone wrong, this short straddle gone wrong, or there is a huge movement happen, which is always visible in the crypto domain. So if that happens, then these two things will be protecting us. So we should not land in loss. That should be our aim. So these three strategies combined together will form your complex daily yield strategy. So now coming to this complex daily yield strategy. So what we have what we have done it here, if you see this strategy on BTC, on ETH, I have given on the 11th December, and we followed it till 9th of January, and furthermore also we have followed it beyond that. You can say many people are still continuing with that. So it has given a very good positive return, though the size is very small. Here too also ETH we have followed. This also has given very good return. So return part wise, the amount of trade what is being taken, number of lots what is being taken, amount of money which is involved in that, if you compare with this return is phenomenally great. And out of that you can just take 20 to 25% is the expenditure which has already happened. So these are the part of, or these are the benefits of this strategy. So what are the things are there? Three things. If you have pen and paper, please note it down. Three things are involved in this strategy. Number one, so first thing is, so number one, the box spread. Box spread. So first is box spread. One is box spread. This will be in the far month contract. So near and far. Far, whenever I am telling we are in January, you should go for March or June. If it is available also, it is good, because you need not have to close and open again. So you can save lot of cost there. So box spread. Second component is long straddle or long straddle or long strangle. So that will be in the near month. So this is far month. So January means March after, and this is near month. January means it is in the February. I'll tell you the reason for that. So near month. And third is your short straddle or short strangle. So this will be on the daily expiry. Sometimes it may be on the weekly expiry, or sometimes it will be in the alternate day expiry. So today we'll leave tomorrow if that doesn't give any proper value to it. So BTC we followed the alternate day approach. So today, so so we have 13, 15, 17. So one day we gave a gap and we kept on selling in the next day. Wherever, however, in the ETH we followed the daily approach. Every day we started selling that. So these are the three components of this particular strategy. So why it is called complex? All these strategies are in different expiry. One is in the far month, another is in the near month, another is in the daily expiry. So when these three combinations comes together, then only this strategy will be formed. So this is how it is known as your complex daily yield strategy. So what is the objective behind this strategy? That is very important. So what is the objective behind this strategy, and this strategy for what purpose we used to take? That is also very important. So that is also very important, what purpose we take this strategy. So if you do not know the purpose of the strategy, then the very essence of the strategy is lost. Important, whenever the price goes up, the we don't want to make any money. However, our theta gain should be always protected. That should be the aim of our thing. So technically, delta must be 0, theta must be above 5 USD. So that should be the first criteria of your choice. So with this ambition, you will be forming the strategy. So now, coming to the choice of the strategy adjustment, since 8 positions are involved here, so you definitely it will create a confusion. That's why I told you this is not for the newbies, those who are very new to the system. They do not know option strategy. It is completely ruled out for them, because they will definitely make the mistake, because 8 positions are there. Then how you should learn? It is not that they are not making the mistake means they cannot learn, because they understood delta as 0, theta as 5. Why it is, what is the impossibility in that? They can do it also, provided they maintain a proper excel sheet the way I am showing here. Very clear excel sheet they have to maintain. No need to be in hurry. They have to punch every data. They have to wait for the proper clarity on that data, whether what are the data they are punching, whatever the positions they are taking. They must understand, yes, these are the 8 positions I have. So then they can think on initiating this strategy. So if you do not maintain a record, if you do not have time, if you do not have the proper skill, then better avoid it. But it is not a delta platform. So you are able to see the screen. Delta platform screen is visible to all of you. So now we are going to have a building of this strategy will happen. So all of you are able to see this screen, delta screen. So if one simple word, that will also be enough for me, yes or no. So yes, we can able to see, we are not able to see anything. If you can say like that, then at least I will get some info, because you are in a remote place, I am in a remote place, and this new system also has been changed. I have to, each time I have to show different screens. Earlier it was a different setup was there in GoToWebinar, wherein once I can jumble between the screens, so there are no issues was there. However, what happens here now, the new setup says that I have to change the screen. So whichever the screen I am showing, so that sometimes some people cannot see that also. So for that only I am asking. So if you are seeing this screen, it is good just to give one info. So so that I'll be sure enough that yes, you are able to see my screen. So fine. So now this is the screen. I'm going for the ETH. So I'll be going for the ETH. BTC also you can form in that order, or BTC also you can form. So no problem in that. So first we'll go with the BTC or ETH. ETH is slightly 100 lots. If we can take, we can able to see the delta. BTC we have to go with the lesser. So I'm going to the strategy builder here. So here I'll just delete everything. So now I'll be forming. So BTC ETH is now 3,300 USD. I have selected the March. So here in Delta platform till March it is available. If you go for the other platforms like CoinSwitch, they have June positions also. So I'm just taking some 500 points here. Arbitrary choice. There is no arbitrary choice I'm taking. So 300, 3,300, 500 points here. So 3,800 put I am selling. So this is also 3,800 put I am selling. So I am selling the 3,000. One deep in the money call and deep in the money put I have sold. So to protect this, what I am going to do, 2,800 put I can buy 3,300 also nearest. So anything I can do it here, but I'll be going with two approach. First, you see that here I am buying 2,800 put. So this also I'll be buying. So this is going to stay longer. So for that maximum benefit of the box I want. So I have bought it. Here too also the 3,800 call I bought. So wherever which call I sold, same strike put I am buying. Put I sold, same strike call I am buying. It is for easy understanding. You can still make it as a complex. So if you do only this is box spread. So this is with respect to the March. Now we need, because this is not going to give us any yield. So even though if you hold it, so if you see the payoff of this thing, so this will say $13, you will be having losses. Maximum profit, maximum loss is $13.58. So it has no reward at all if you just make these things. It will not give you any reward. This is only being taken for exceptional cases. If there is a exceptional move happens, it will give. As such, if you hold this strategy, it is of meaningless. Nothing it can give. But say it has moved to 3,500, then the calls we are changing, means the our puts we are changing. Initially we have 2,800 put, price has moved up from 3,300 to 3,500. So we are bringing the put to 3,300. So for that oscillation or some speculation, for future speculation, it can give us some profit. But as such, if you hold till March end, nothing you are going to get. You are going to get $13 loss or $14 loss along with all the statutory expenditures. So this part is over. Now this is happened for the March. Now I will be going for the February. February, what I'll do, 3,300 call I'll be buying. So and same put also I am buying. So 3,300 call and put. So you can name it as a saddle, strangle, anything you will be knowing. When the same strike is being bought, whatever the name fit to it, you can give saddle, strangle. So if it is different strike, so name is not important. So first component box is over. Second component this is over. So one thing I just forgot to show you here. So here we saw that there is no profitability comes here. But what about the Greek? Greek is 0.05 is the delta, almost zero. Theta also zero. So theta and delta almost zero, meaningless. So profit and loss also is 13.58, 13.6. This is, and you have to remember, box strategy as such never give any profit. Whether you do it within the index, whether you do it in the crypto, Without any speculation, it never gives any profit. It is only for speculations, because this is not a one way journey that it will go up and up and up. So this is for that reason only. Box spread is only for protections, for making one specific room for a different strategy. For that purpose it is being utilized. But box spread, to make it profit, you have to follow a different approach. So first approach you can understand, second approach and other things I will tell you afterwards. So now March is over, February, I am just buying one call, one put, and this buying also I am doing in the 240, and here too whatever the premium 260, both are ATM strike, ATM at the money. So February, so February is far, means it is near month. So this is far month, it is near month. So this part is over. It is not necessarily it should be 3000, 3300 and 3300. Sometime you can take 3300, 3100 also. So depending on the situation you can do it. Now we are sitting on 14th. Now we'll move to the next part, which is on 16th. 15th we'll leave it, 16th. So this is our profitable component. We'll sell same strike, call and put. Same strike, call and put. So call with put we are selling 48, and call also will be selling at 48. So 16th expiry. So this is 48, 48. Almost all are theta. So earlier you have seen theta is almost zero in box case. Even though if you add this, theta will become somewhat negative, but delta will almost zero. Now go and see the Greeks. This is earlier case only with the box. What was the there? So this projected loss you don't look into, because 3 series is involved, so it will definitely misguide the system. However, the Greeks will tell you the actual picture. So earlier what happens? We had a delta of 0.05. It has come to 0.01. It is for 100 lots. So do remember, for entire 100 lots for one ETH, if you go for one lot, this is divided by 100. So this is almost we are coming to a zero level. Still, if you want to reduce it, it is what it looks positive. So we can add some 10 lots of put somewhere and make it zero. That is if it is essential. But what happened here, we kept the theta as 19 above 5, and vega also positive. Vega positive, theta positive. One more interesting part is gamma. What is the gamma? The rate of change in delta. So gamma also is 0.00533. That means, so rate of change in delta will be constant, because gamma is very very feeble low. So even though the price goes up or come down, this delta may not speculate, may not fluctuate in a great way. So this delta may stand at a same level of 0.11. So here 0.11 delta is for how many lots? 100 lots. So 100 lots of for one complete ETH. Complete ETH, this you are getting. So per lot wise, if you see, this will be very, very minimum. So this is what you got it. So this profitability and liability part will not work out here. The reason is all three are having three different expiry. Post 16th, these two component will go. What will replace? The same strike will come and replace here for 18th. On 16th, so we can replace it with the, say, after this particular event, after you initiate these things, say there are 3300 level, it is oscillating. Suddenly you saw a price gone to 3600, or price fallen back to 3000. So here these two places, whenever there is a 10% up or down happens, that time only the criticality of this particular strategy comes. So here, those who have already joined the programs earlier, they'll be knowing we have how many how many types of adjustment. We have profit capping adjustment, we have profit expanding adjustment, we have critical adjustment. All different type of adjustment is there. So before going to that adjustment, try to understand this particular two components. Box you have understood, these two components, what will be the maximum liability and what is the if suddenly there is a huge price up move happens, huge up move, say 10-15%, you have just initiated, slept in the night, next day morning you are seeing that it has gone to 3600. So there is a 10 or 12% up move. So what will happen, this call option which is having almost 260 rupees theta, it will be decay, this 3 260 rupees will be decay by 60-70%. So 70%. And this call option which will be having only 48 theta. So this also will be trading at a 300. This also will be trading at a 320, 350 something or 3 400. But the difference of 220 point which it is maintaining now, 220 point, this 220 point will not be maintaining if it goes to 3600. This difference, spread difference, means 261 minus 49. So or 50, 210 points, 11 points. Whatever 211 points of debit it is showing now, once the price goes to 3600, this debit 211, it will be not be showing, it will be showing 100 point debit or 80 point debit. So that means there is a 110 point of risk is there. Similar way, it will not be having the only damage this side, other side also, the put option side which is having, you are having near to 200 point debit now, put side is having 193 point of debit. So what we are seeing, this calendar monthly with respect to daily expiry 193, and we are having 211. So in case of a huge up move 3600 overnight, what will happen, this 193 debit, almost 100 point will be your loss or more than that, 100 or 150 point also, or 120 point will be lost. So here also another 100 point or 110 points will be the loss. So 220 points will be the loss here. So this 220 point loss who will recover? One component of your box, that put side of your box, 3800 put with respect to 2800 put, that will be compensating a part of this. So in case there is a jump till 3600, you will be having 200 and roughly $210 of losses per 100 lots. Out of this 210 point of losses, almost 70%, 140, 150 or 160 point of the things will be compensated from 380 put as well as 2800 put. But similar damage will be there in the call side. So you have 2800 call sell with 3800 call buy. So that call side also will have something, some damage. So what we will think, okay, after these things, if there is a retracement happens, we can recover something, we can recover something. So in which case this will not land in loss, that is very important. Say we have initially got this particular 48 50 50 100 points, we got 100 points, we recovered till 16th, no big move happened. So 100 point we recovered because we have already given here 400 and almost 500 points we have given, $500 we have given. 5 days of oscillation if it happens, and in 5 days if we are successfully getting $100 in a day, so after 5 days, if 5 days of consolidation happens, we can get that, or we can be in a position to recover this thing. So initially, since we are in February, we are in March initially. So three, four things I am telling. Keep a note of everything. It's a complex. So first is you are having a box spread just to protect this part. So this particular four combinations, in case of 3600, 10 to 15% up move from here, similar weight the down move also by 300 points, you have a $200 of risk, $215 risk. But out of this $215 risk, the if it is a up move, the 3800 put with 2800 put, this will recover almost 70%, but call will be having that damage. So call will wait for some time. When there is a retracement, we can get it back. So that is one part. But initially when you just initiated this position, so this is almost, you can say, 5 days we have to wait to get it. 5 days if we are able to get $100 we can we can say that we have achieved the break even. Sixth day onwards, if that particular things continue, then we will get a good profit. Now what are the choices we have? The choices what we have here, shall we do here say 150 lots, the long side, straddle or strangle, whatever it comes. I'm using straddle or strangle because sometimes we have to take in different strikes also. So if you make it means 150 lots, slightly if we increase this thing, so what will happen here? Profit and loss part you forget, because this system will not be giving you the profit and loss properly. However, delta part, you can say delta has reduced to something, theta also reduced by something, but everything is stable. Earlier we are into 0.11, now we are 0.09. 16th delta we can somehow in case there is a huge up move or down move, we can recover some part of the things. Instead of 210 USD losses, with 210 USD losses, our losses will reduce by 50%. We can land it at 110 USD losses. So by increasing this part also, we can reduce something. So other things will be as it is. Suppose we don't want to do that, so we don't want to put upfront money from our pocket, we want to keep it 100. Why should we put money from our pocket, which is the theta decay is there? So these 48 whatever is there, so 16th is there, so we can go to 23rd if we can sell. Say how much? 23rd, because liability whatever is there, so 3300, 23rd expiry. So these two, 23rd expiry, so 23rd January if we can sell. So here, so 48 was there, so you can say that we can get little higher money. So here put is 90, call also will be 104. Instead of 100 we are getting 200. So this also is other options in our hand, other probability in our hand. So this also is possible. So here all things will remain same. Instead of initially, when we are first time initiating this strategy, instead of going with the daily expiry, we can go with the weekly expiry. So slightly, in case there is a jump happen 3600, 3000 before 23rd, in this case also our losses will not be 210 USD. Our losses will protect at 110. So this is also possible. Let us have a look at the Greek part. Greek is very important factor is here, the Greek. Without Greek, because this particular profit and liability part, this is say Greek part is very important. See 0.07, our theta is 5. So you see here, by just changing it to a weekly expiry, delta has no big change. Delta earlier it was initial case, it was 0.11. Again I repeat, when you have increased the long straddle or long strangle quantity by 50%, it was 0.09. Now you are not increasing that, you are just going with a weekly option sell, 0.07. So theta terms it is varying. Initially theta was 22, 23. Second case, the theta has come down to your 16 level, and third case 5. All three are acceptable. And next day, very next day, as you go closer to the 23rd, what will happen? This theta also will increase. So these are the three different ways you can initiate. Two, three things you have to see. First, here this profit max profit projection is wrong because three series is involved. It is taking after expiry. So means one part is closed permanently, others will be open forever. So we are not going to do that. So we are going to harvest the theta every time sequence. Every time sequence we are going to harvest the theta. That should be our approach. So these are the things I have told you. So don't go with this margin also. This margin, if you initiate this thing, actual margin on this will be for this 100 lots, definitely I think it will be around 200 USD will be your margin. It may increase and decrease, but almost 200 or 300 USD. This is not 800 because different strikes are involved. So that is why it is swaying. So these are the three different ways you can initiate this particular strategy. So first approach, all lots are same. Daily expiry you can sell, and second approach, the long straddle or strangle will have 50% extra positions. Third approach, initially when you start, today if you are going to start, then I will say that better go with the 23rd, better go with the 30th January initially. Post 30th, what happens? You can go for a different daily expiry because by that time you would have recovered a great amount of the things and much risk will not be there. Now this part is clear to you or not? Theta is profit contributor, others are the protector. Protector means you don't think that okay, protection done, it is over. One box spread, which is a silent, means it requires speculation. 10%, 15% above, you have to adjust the box spread strikes so that whatever the losses has happened, so that will again come back to you once the trend reverses. So or trend continues and upper strike it penetrates and goes above 3800. In that case it will come to you, or it should have a some protections. So box spread as such will not give you anything. If you just keep on holding that box spread till March end, $13 loss will be there. Box spread is there. This $110 which has gone out of my pocket, when the trend reverses I will get it back. So trend will reverse today, tomorrow, 5 days, 7 days, you have to, it will reverse. Then your objective, I want theta. So how to gain the theta? So that is you have to do. So why I am telling daily expiry? Because crypto is a highly volatile instrument. Crypto and stocks don't compare both of them. Your index will have 9%, 10% IV, or hardly some 20% maximum it goes index stocks. But here the IV starts with what? See, 51%. 51% IV. Don't ever dare to compare both. Both are distinct instruments, different instruments. They cannot be compared together. 8 positions, 4, 6 positions are defenders, protector of 2 positions. That is how you are playing. So it is not that okay, end of day this is the loss happened. It that will again come back. You have to adjust the box, and again come back means what? How it will come back? Again same policy. Delta. You have started with 0.11 delta. If 10%, 12% happened up or down, you adjust in such a way that you bring your position to same delta 0.11. So strike will be different. So fine. So this has happened. Say we have initiated this particular strike. So whatever I have shown in this, so that same thing we have done till 23rd of December, 23rd of January. This two 3,300 call and put is being sold. This box is being initiated, and monthly position also is being initiated. Fantastic. Everything is koji, correct. Now say after 23rd, forget 23rd, by 20th you are seeing that it is 3,600. So 10% plus or 10% minus, say 3,000. It has happened. What will be your plan of action in this stage? So this stage, what will be there? If it is 3,600 means the call side damage will be more. The call side would have created a damage. Call side would have been created a damage. Put side, this put also will be a damage, but the other put what you have sold from there, some 48 points you would have recovered. You have sold at 48 or 90, whatever the things weekly means, it is you have sold at 90. 90 you have recovered. Now what you have to do? This call side keep as it is. You don't change this. Keep the 3,300 call as it is. Also, you sell, if initially you sold 23rd, now means initially you have started with a weekly option, now you sell 30th January, same 3,300 call, because profit capping adjustment. So profit capping adjustment will be done only in call, not in put. 3,300 call, but that time if the 3,300 put of daily expiry after 23rd, I am telling. So because here we have added for 23rd, so here we have added for 23rd with reference to this 23rd January. I am telling we have got $194. Put $90 is completely a gain for me, and immediately similar way here also the damage would have been created. So that whatever the damage it has been created, that is well and good. So there is nothing to worry about that. So what I will be doing, slightly I have to go complex, because without this complexity you won't get that value of this. So this 3,300 call, don't change. Again you sell for 30th expiry. 30th expiry. Done. Now this put you close, and that other put is already given you full and full benefit. Move your positions to 3,600 put. 3,600 put monthly buy means February buy, and keep selling on 3,600 put of daily expiry or weekly expiry, whatever is your like, based on your involvement. I'll prefer once 1 week is over, then you go with the daily expiry, so that quickly you start mobilizing the money. Similar way, if there is a correction till 3,000, correction till 3,000 if it happens. So what happens here? If the correction 3,000 it happens, what you will be doing, this put 3,300 put you can keep as it is. This call will be meaningless, so that time you can close this, because daily expiry you may not get 3,300 call any theta, not sizable theta. So you buy a 3000 call option of February, monthly expiry. This you have to buy, and daily expiry 3000. You can keep on selling. So this is one approach. Along with that, if you want slightly, I can enhance my profitability. So whether it is 3600 or 3000, that time your box will be, one side of your box will be at a profit. If it is 3600, then the put side will be at a profit. 3800 put sell along with 2800 put sell. So this will be at a profit. So what you have to do? This profit, this strike 2800 put also you close. Go with one 3600 put buy. So you cap that profit. So profit capping you have to. So three adjustment will play together. So if, again I am telling, keep in writing, if it is 3600 in call, you have to follow the profit capping adjustment. In box spread, 3800 put as it is sell, it will be there. Buy a 3600 put, follow the profit capping adjustment. Call side don't expand because 2800 call and 3800 call will be there. No need to change that. Put side, whichever is the profit, you cap it. 3000 call, 300 call options, cap it. Means you should 27th, you should book the losses, again sell the next same strike of the higher expiry. But put options, what you have, 3300 put option, what will be there, that will completely go out of your things, and you have to implement a new strategy at 3600 put. So you are distributing two profits, you are capped, again you are moving to a new strike halfway to earn theta progressively. Say after these events, it has gone above 3800. So 3600 it was there, 3800 it become. So your box spreads 3800, box spread 3800 and 3600 that time will be at a max. It has achieved the maturity, completely close it. After this, if it is goes to 3800, so box spread this put option, and that time 3600 put option long you will be having, both you close, and again you go with the 3800 put by 500 points, 4300 put sell. So this process, but call side you are not touching at all. So profit capping will happen in this order. Say if there is a correction till 3000, what will happen? So call side will be at a profit. So 2800 call sell with 3800 call buy, this will be at a profit. Either cap it or take a new things. So that is what we did in the December to till date. So December to till date, what we did, the same thing we did here. So same thing we have done here. So when we took this position, so I'll be just going to the screen. So all of you are able to see that screen. Fine. So here we did the same thing here. So initially, when we have initiated, this one, what happens? What happened here? So we have initiated with 3200 and 3000 call. 3000 call along with 3200 put. So within some 200 points difference we have taken, then price fallen, so we closed it. We have moved to 2500 and other strikes. So this is, and that time also all strikes are changed, again closed, again moved to this thing. Then after it is stabilized, nothing we have done there, and it has stabilized, and we have just changed this long straddle or long strong strangle component along with the short straddle or short strangle component. Same way what I have explained, same way we have maintained, and we have till the so till the part of our holding we got the benefits. So this is what we did. So in first layer of protection, this is the long straddle or long strangle. Your second layer of protection is box. So second will be touched only when there is a huge move, 10% plus or minus. So that time only you will be touching this, so that if there is a reversal, you will get back. If there is no reversal, still trend continues, you can get back. And long straddle or long strangle will be your first level of defense. So that first level of defense is almost, in case a huge volatility, you can change that, means immediately you can have some uh, you can say, you can if that will immediately protect your short strangle or short straddle position. Second level protection is box. So box is the last layer. If I say 12%, 15%, 20%, that goes to record, that add to greed. It is not the record alone, it adds to the greed. That is where many people does a mistake. Whenever training programs happen, they told you will get 20%, 50%, 30%. They did not come. So these people say that ridiculous. Approach is very important. Approach is very important. Three different ways I have told you to make this. So it is not necessary that it should be always 100 equal lots. Sometimes if there is a huge volatility, you are anticipating 50% iv I have entered, now it has gone to 75% iv. For example, now you are entering a trade when the iv of these options 50. So this you can able to remember or note it down. It is 50 iv I entered, now it is becoming 70 or 75. So what I'll do in this case, I'll not sell the weekly options and all, because weekly options will have lesser return, because daily options will have higher theta. So instead of that, what I'll do here, this 3000 I'll increase it by 50, 150, 150. My style will change here. If the IV increases, when I entered it is 50. Now after 3 days, 5 days, I am seeing that it has gone to 75, 60. There is a huge jump in that. What is gone, I cannot make it. But what is there now, I can play on that. So your behavior will change with respect to the market. Your behavior is very important. That is what I was telling to today to one of our participants. Your behavior is not your personal behavior. Your behavior should be market's behavior. Market is consolidating, your view will be consolidating. 100 lots, weekly option sell. Market is gone to a high volatility territory, your behavior will go to the high volatility territory. You will make 150, 150, instead of selling weekly, you will still sell daily expiry. You will have an aggressive adjustment in the box, high volatility territory. So your behavior, like one child, small kid, smiling, parents smile, sleeping, parents sleep. Kid is telling we'll eat this thing in a restaurant, that is being ordered. So you are mending your behavior towards the kid's behavior, because you know that you cannot change that. Similar way in market, when market is behaving different way, you also behave along with the market in a different way. So if it is, I have entered at 50, it is still 50, I'll continue with that. So that part is there. So more important, when I am not making money, I should not lose money. Very carefully write this sentence. When I am not making money, I must not lose money. So must not lose money. That should be your concept. When you are making money, everyone will make money, you will make money. But how it will be different from others? When nobody makes money, I am not losing money. That is what is there, and it never takes. You must say that. So most probably you have not lost money. Yes, I have lost money. It is not that it is not lost money. Money should be lost. So by that process only can be learned. So why this strategy? How it come? This that it is a long story. How long it takes? It takes years to configure one strategy. Years, not days or months. It takes years to configure one this thing. So at what we should do so that our profitability should be intact. First thing what I did, what is the importance of this thing, or what I did in this particular, forget about this max profit max loss, because this is 3 expiry, it won't tell you the exact thing. First is the delta. My delta should be stable. In case of a huge up move or down move, my delta should not change. Delta should not change. Delta should not change at all. So 0.07, it should be 0.07. When it should happen? When the gamma should be very 0.00136. If gamma is almost zero, delta will not change. With respect to the underlying asset, it price movement, it will not change. Theta should be 5. See here, I made 150 lot. Theta become 2.31. Is it good to take now? Tell me. What I did here, I made 150 lots of monthly buy. By this process, what happened? My delta become stable, same 0.07, but theta become 2.3. Is it make any sense to take it now? Tell me. No, we cannot make it as 150, because delta is same, but theta we need $5 at least. We need $5 at least. So even though by mistake in 48 IV you made that 150, so once you look at your net delta, you will come to know that there is some mistake. It is not 5. That's why these points I more emphasize on these points. Keep a note on this. 5, delta, theta, vega, omega. So vega should be 5. Volatility we want, so plus 5. It should be required. We want volatility. It is not that we don't want volatility. In this strategy, we want volatility. So we want theta to be above 5. Delta will be stabilized because gamma we have to keep it near 0. Decimal after 2 zeros should be there. So gamma should be stabilized. Very low, so that delta will behave properly. So these two things is required. By mistake, if we have made it 125, 150 lots something, we look at the theta, will know that it is not meaningful. Because even though if you sell it, what will happen? You won't get that profit. After 2 3 days, you will see that system is standing at a loss. So this is very important, very important. These are the points you have to remember. As such, its name is complex strategy. So any strategy which is complex, which will not behave non-complex. It is name is complex, so it should be complex. Any complex strategy cannot be complex. Same way again, adjustment. When there is a huge up move happen, call damages we want to minimize. Whatever the damage done, maximum happened, but now onwards the damages will be lesser and lesser. Sometimes it will be nullified, but that is required. Same 3300 at 3600. I told don't change this call strike. Why? 3600 I told don't change this call strike because it is deep in the money. Whatever the weekly or daily expiry you are selling, you will be getting lesser theta gains. So you keep on accumulating that, and box is already compensated a part of losses of this trade. So put side, move it to the higher things, get some theta yields. So that is there. And in case there is a reversal happens, then whatever the delta accumulation happened on your 3000 call option sales, it will start giving you return. So that once you implement work on that, you will understand that part. So now question comes, whether BTC performs better or ETH perform better. You are not asking any questions with this. Whether BTC performs better or ETH performs better. BTC performs better. ETH for quick returns. BTC performs better, but one problem is there with the BTC, liquidity problem. We may not get that much of liquidity. Sometimes we have to hang on with the $300, $200 positions for a long period of time. So that is problem with the BTC. But return wise, if you see longer period return, BTC will be having better return, but a liquidity issue is there. So if position size is small, go with the ETH. 5 ETH, 10 ETH, 20 ETH, can go with the two things. Position big, if you want to do a bigger trade, then one coin of BTC if you want to do, then BTC is advisable. Bigger trade, BTC. Smaller trade, ETH. ETH is more volatile, so more adjustment demands it will ask. BTC will not ask more adjustment demands. Adjustments will be lesser. But BTC, if your basket is big, you want to do in a bigger size, similar things, you can go with the BTC. So what should be done for the BTC? So now question comes, can you show something on the BTC similar way? So I can go for the BTC and strategy builder. So 96,000 almost. So here March. So 96 I can go 105. The great. So 105 sell, and I can go 96 is there, 90 sell, 90 call sell, 90 put buy, and 105 105 I sold. So 105 call buy. So this has, as I said to you, so this is price will put. So this is box, your box, and random. So there is no, so 10, 12,000, 15,000 we have to put it. So 10,000 I have put it almost. So 10,000 point from current level. So almost it has come that. So if I go with the 100 lots, because one lot you cannot able to see the actual delta and theta. So if you go with this and look at this part, what it is showing, $8 loss, $8 profit. So it has no profit, no loss now, because this is only a box protector. Greek almost zero. 100 you go, 1000 you go, everything. If you whatever you go, so if you go for 1000, so 1000 lots, 1 BTC, 1 BTC 10 times. If you go also, so what happens here? 86 plus or 86 minus Greek 0.05. So here theta also minus 2, vega 5, but it is of meaningless for us. Now what do you have to go? February. February where 95, 96 it is telling. So we'll go with the 96, 95 and odd. So 96 February 96 by, here also by. So 96 February. So same process. If you have taken thousand lots, here to also thousand. So thousand, thousand, 1 BTC. Now we'll go for same process of 16th or 17th. Go with the so 14, 15, 17. So you can go 17th. So initially go with the 17th. So 17th sell and sell, 96 call and 96 put. 17th January. So this I am selling, 17th call. So $1,200 he will be getting, 96 call, and here also 96 put. You can go with the 16 also if that is a sizable value is there. So you can, so go here. So profit and loss projection, as I said to you, it is of, it will erratic things, so it may not get. So Greek, because it is telling the position which expired. So there I am going for full entire 1 BTC, 1000 lots. Delta, see the delta, very low, 1000 lots. In 1000 lots, delta is 0.11. Vega again, point followed with a 3 then. But what is the best part in this is theta. Theta is $322. $322. That is the catch here. That is the biggest part here. So you can say here 96 call and put of February. So 5. So here 5 for 9 near to $10,000. $10,000 you are getting $2,500 in time value at by 17th. So 4 to 5 days, 3 to 4 days break even, 3 to 4 days break even. So that process you can follow 96 and keep on. So there is a 10% of move or down move only box has to be adjusted or else not. So 17th again 19th, then this thing. So keep on doing in that order. So this is how you can take for the, you can take for the, you can take for BTC. BTC for the bigger position if you initiate BTC max. But 5-10 lots, nothing will come in BTC. BTC minimum 50-100 lots, some money you can get. But BTC, if you are having a bigger position, stick with the BTC. Lesser adjustment will be there. 10% up plus or minus is a very rarest case here. But if you are having smaller positions and you are ready to do the adjustments, then go with the ETH. ETH. Anybody has any other query? 33 basic strategies: saddle, strangle, guard, condor, box, this thing. How many combinations you can form? 33 factorial. That many combinations is formed. Which software will do that? What is the objective of a trade? That is very important. Whether it is only to play or to make money. So that is why these 33 factorial combinations cannot be mastered. Only one thing you can master, that is your Greeks. Because Greeks, what you want from that? I don't want from up move or down move. I want only from theta. So this combination. When I want from the up move or down move, I will have neutralize the theta. Theta 2 less than 5 rupees I will bring. I will keep some delta plus or minus based on the trend. So only you can master the Greeks. You cannot master these combinations. Combinations names. That's why I used to tell these names are unlimited. So this strategy I have given a complex daily yield strategy. What is the name of this strategy? These 8 legs. Saddle, strangle, God condor, everything you know. But what about the name of this strategy? These 8 legs are there. You can simply say 8 leg strategy. Beyond that, you can't say. So for that, name is meaningless. So that's why name is meaningless. Objective is very important. What you want. Because name, if anyone is remembering, let him remember. Through his life will go on, but that names will not end. Because many 99% of option trader they tell me, sir, what is the name of this? Oh, this is saddle, this is a box, this is the falana, this is having a diagonal this spread, horizontal that spread. This name they used to spend lot of their time. 90% of their time goes in that. Only to nomenclaturing that. So main objective of the strategy gone. With what, with based on what Greek, what ambition, what expectation it is built at, that is missed. That is gone. What is remember, they will be hunting for a name. And you will surprise certain programs they used to tell, they will say, sir, you give a name. First we want one name. Means their objective is not to learn any of these strategies, internal or technicality. They want a name. because it has started from this thing. Even their cycle in their house also will have a name. Car also will have a name. Dog also having a name. So that is the things. Name and nomenclature is very important. Nomenclature is not important. Name can be anything. You name it. This eight leg strategy, you make it that Ranjan's eight leg. You remember that. I have no restrictions in that. But objective is very important. If my delta is 0.11, that should remain 0.11. If my delta is 0.11, irrespective of any move, this should remain 0.11. Or small uptake, downtakes can happen. Delta should not rapidly change. That should be my objective. Theta should be positive above 5. That should be my objective. If this condition is not met, I am not going to enter. First, I will make this condition viable, then only I will enter. This is important. The way, if you start learning in this order, you will master all strategies. You don't require anything. Anyone's help is not required. You yourself can form many combinations. These eight leg strategy, you yourself can able to interpolate many things out of that. If you just think on progressively on delta part or progressively on the Greek part. But if you do not think on the progressively on the Greek part and only hang on to the name, let it happen 1,000 hours training or 5,000 hours or 10 years training, nothing is going to help you. And strategies learning is a difficult task. It is not a easy task. It involves lot of logical reasonings. It involves lot of your viewpoints there. So you are seeing now, you will be experiencing many things is happening. So everything, somebody give a training, somebody has given told something, so they are responsible. Why not the person who has jumped into that, he is responsible? So all are responsible for that. Why? So we have to think on that. So objective, what I said, strategy is objective. When all are making money, you will make money. When situation giving you money, you should make money. When there is no situation, when others are losing, you should not lose. That is important. When making money, all are making, you can make. But when others are losing, you should not lose. That is very important. You are encapsulated from the loss. When the opportunity of profit comes, you encash. That is very important. With this, you have to go. You have to go with the market pulse. So market pulse, how I will know? It is not a floating pulse. Floating pulse means it is a bullish, bearish, this, that, all floating talks many traders used to do. Some technicality should be there in your thought. When I am entering in this strategy, situation says I am at a 40% of IV, I am entering in BTC. As long as it maintain 40, I am okay. 40 becomes 60, my behavior should change. 40 become 20, my behavior should change. If by 50%, 10-20% change in the IV behavior, 10-20% change in the behavior of the IV plus or minus, I should change my behavior. So if it is 40 to 60, so I will be increasing the buying side by 50%. 40 to 20, so instead of selling the daily expiry, I will sell the weekly expiry. So now the VIX is 40. Adjustments are of four types. Here you have to do. If there is a huge up move happens, profit capping will be there in the call side. Means the call side you will not disturb, the long call and short call will not be disturbed. Rather, the short call you can change it to weekly call sell. So you will be earning lesser theta in the call side. However, put side you have to completely change it to different thing and take it to a new strategy, a new strike where you can get maximum theta. So if there is a plus 10% happen, plus 10% move, plus 10% move happen upward, what will happen? Call side you will be keeping as it is. No change in the call side. So means long call and short call will be remain as it is, profit capping. Then box will be adjusted. Box, which one has to be adjusted? The put side of the box should be adjusted. So this put already what you have sold deep in the money, it will be in profit. So the deep out of money put what you have bought, that you have to bring it to ATM or ITM put. So you cap the put side profit. So this profit has not come to your hand, still it is on paper. So when there is a, you are expecting a reversal, if the reversal happens, this ATM it will gather 70-80% of the profit. So take it off again, take the put to the OTM strike, which was originally sitting before. So similar way you can, and when after a rally, if there is a correction, so what will happen? Your 3000 put options, what is saying that you make that thing as a silent, again keep on selling the call options. So now if it has gone to 3600, after that you can say it has fallen to 3300. So what you will be doing? Put side sell one ITM put weekly option. Make this thing as a silent. No theta yield from here. Keep yielding from the theta from the call side. And that time again, whatever the accumulations happened in the put side, what you have already means profit capped, bring it to the original stride. There also you book some profit and make. So you can cash convert that profit to your books, bring that profit to your books. So that process you can do on. So there are many. So this is one of the style. Don't think that this is the only style. So many. So that depend upon how you think on that trade. How you think, your thinking, my thinking may be different, but how you think on that trade, that time it is important. What you want, which one you want to make it as a means you can say which part you want to make as a silent part or protective part, and which part you want to speculate and get money. So that time you need to decide, and what are the events are there in the backing, that also you have to decide. When sometimes after 2 3 yield you are finding out that okay, I have entered with a delta of 0.11, but it is going to 0.25, not coming back to 0.11, 0.25. It is a irrespective of my all things, it is not happening. So in put side just add 10 lots here, 5 lots here. So neutralize, it is not same. So why to add one more strike? You can do that, this you can do. Or adjust this strike, instead of 3300 strike go with the 3400 strike put. So that also will automatically adjust. So adjustment is purely on your wisdom, how you think on that trade. So three different ways I have told you through the recordings as many times as you like. There is no restriction we have put. Note everything. Complexity is complex strategy. If it is not there, saddle, strangle, god conquer, nobody has made money. Nobody will make money. Keep it writing. Saddle, strangle, god, conquer, all these basic strategies. So far, nobody has made money. Nobody will make money in future also, because this combinations is only for straight line expectations, not for a expectation of curvic nature. Which is never work, it will never work also. Now also it never work, it will never work in future also. And in future also it will become more complicated. So you have to create mix. And music also has come fusions. Liquor also has come cocktails. Simple water also is now cold drinks. Simple water, if somebody sells at 13 rupees, same cold drinks goes to 25 rupees. So everything is based on that. So you have to think in that order. Why your strategy cannot mix? Liquor mix, this song also mixing, liquor also mixing, water also mixing, oil, everything is mixing. Food also having multiple things. Only chapati cannot be eaten. Chapati, sabji, all these things is there. But when it comes to the strategy, no, it is difficult. I want only straddle, strangle. Got current, got kanda, box spread, all these things only I want. Right? So with this, I'll be ending today's session. Thank you very much. Thank you for your time. Recording will be given. If any query, you can ask me in the